We're good to begin, guys, and I would be speaking to you on market profile today. The way we formatted today's session is for you to give you some information about the market profile, about what we have to do over here. Try to keep the chat to the minimum right now, guys. I want you guys to focus on what I have to say to you, because this is an important topic. It's not just important to me, it's important to a lot of people I trade with. We make our lives with the what I would be speaking to you about. So make sure that you listen to what I have to say. I'm going to be speaking to you about the basics of market profile. I'll open the floor up to Q&A at the end. So if you have any questions about what you need to ask me about the market profile, you can ask me at the very end. For now, try not to put in a lot of questions on the text chat. This is basically a voice presentation where basically I have a message which I want to convey to you about the way the market profile is done. And if you can hear me out well, and if you can understand what I have to speak to you about, I can assure you that whatever the market does from tomorrow, up, down, sideways, wherever it decides to go, you would have a much better time at trading and making the money if you just try to understand what I have to speak to you about today. The message of today is market profile, and I've basically chosen to call this rewired for a simple reason, is because there is a lot of noise associated with the market profile today. I'm gonna basically try to eliminate all or most of the noise which is over there. We're gonna strip all the non-essentials and stick to something which can reward you for the time and the effort you put in it. So we're gonna cut out all the theory, and we're gonna be speaking to you about what you can utilize for yourselves in your daily time as a derivatives trader. Now, this webinar is going out to only people who are trading in derivatives. Market profile can be used by people who are trading stocks and who are using stocks for the long term, etc. It can be done that way also, but the major reason why market profile is got the following that it has is because it helps the derivative side of the business more. If you're looking for that quick return from the market, if you're looking to get engaged with the shorter side of the market and turn consistent profits, which is profits coming in every single day, then you would benefit from what we have to speak to you today. Now my purpose today is basically a disclaimer at the very start. My purpose to you is just an information exchange today. My purpose is just to ensure that we communicate today, and there is a message I want to get across to you. I'm not here to sell anything to you. I'm not here to promote market profile. I don't run a charting service, neither am I interested in selling any indicators or anything else to you. This is not a sell webinar where I'm gonna be inviting you to a workshop, etc. at the end of it. Take it from me, guys. I'm not interested in any of that stuff. I'm very happy with the trading I do, with what I have for myself today and the team I work with. We are just gonna speak to you about a certain bit which is an information exchange today. Now on your screen right now, I have a piece of art. For you, and if you look at this piece of art, you would be wondering what this is all about, right? Who can make anything out of the screen which is present in front of you? Who can make anything out of that picture or that image which is present on your screens in front of you? Anyone? Come on guys, okay, this is a question, okay, let's start engaging over here. This is, like I said, okay, a communication business. Okay, what else? What else? A lot of you, okay, are seeing a lot of things. A lot of you are seeing a lot of things. I'm gonna take the picture off. Now there's nothing, okay, on your screens right now. Okay, a lot of you, okay, saw, okay, a lot of things, okay, and you saw, okay, what you wanted to see. I'm gonna take okay, the image off. Okay, now I can guarantee you, to you that if I took the image off and if I asked you, okay, to recollect, okay, what was there on your screens, most of you would not have seen anything. Most of you will not even remember, okay, what you just saw. Okay, why? Because I did not pass any information. I did not pass any information about the screen to you. Okay, but now hear me out, okay, for 2 minutes. Okay, I will tell you that painting, okay, which you just saw was by a person by the name of Esref Armangin. Any one of you has heard of that person before? Esref Armangin. I'll put the screen back for all of you. And in this painting is by a person by the name of Esref Armangin. Means nothing, right? Okay, it just could be another name, okay, out of any other individual out in the world. This person, Esref, he was born in Turkey and he's aged 53 today. But now, if I tell you that Esref Armangin, who did this painting, was born blind. He was born blind and he did this painting as a blind person. Now does this painting mean anything more to you? Yes or no? Yes, a blind person has painted that. What you saw, those two houses, that boat, etc., a blind person has. Does this painting have more meaning to you? Okay, I'm about to tell you something else. Okay, Esref Armangin, okay, there was a study done on him by two professors from Harvard. They came to his place in Turkey, okay, and then they did a high level visual study of his neocortex, the brain, the cortex, okay, where all our visual information is stored. And then they took scans of it, okay, and then they put these projections out to people outside, and those scans lit up as if he could actually see, meaning there was no difference between a person whose visual this neocortex, the visual cortex, okay, is normal, and a person is blind. A person who was shown those scans, okay, could not really make out, okay, whether that person, whether Esref Armangin was blind. His visual cortex, okay, was lit up exactly as a normal person. Okay, that was a study done on him on Harvard. I'll tell you one more thing. Volvo, have you guys, okay, heard about Volvo? Okay, the car maker. They called him, and for one of their models, the S90, okay, they asked him to paint that particular car. Again, okay, remember, he is blind. Okay, and he painted, okay, one of their models, and that particular model, okay, was sold for a large sum of money. Now, okay, with this added information about Esref Armangin, I can guarantee you that this picture which is there on your screen means a lot more to you. Is it not? Yes, no? Is it not? With the added information I gave you about this piece of art, okay, which looked like, okay, a child's painting, now, okay, suddenly, okay, this image has got a lot more meaning for you. Am I right in saying that? So what I have got to communicate to you this morning is that if we add the proper information to anything we look at, and as technical traders, as derivative traders, all that we look at is a chart. And if we can add the right information to that chart, then suddenly, okay, it has more meaning for us. Okay, now am I communicating with you guys? Okay, can you understand, okay, what I would be trying to say to you today? It's a medium of information. Okay, most people do not succeed because they are working with inadequate information. They see a chart, but they are not able to understand what the chart is all about. But when we add extra bits of information to that same chart, that same chart itself, then okay, the message becomes a lot more clearer, and you have something called a memory. You can remember things better, you can work okay with the information better, and that information becomes knowledge. That knowledge okay translates into wisdom for you okay to make decisions out of. Continue. Okay, so this is a question okay which should be uppermost on most people's mind. Who am I? Okay, and the simple answer to that, I'm just another trader like you. It's only that I have moved on this part a little bit more earlier than you. Okay, that is the only difference okay between me and you. I trade the same market as you. Okay, I'm just gonna illustrate okay what's trying to see okay if I can show you okay some of the trades okay which I took yesterday. I hope they don't take it off. This is the account I work with. So I have okay about 2 accounts I work out of. I use a derivatives account okay with Kotak, and I have a investing account okay with Motilal. I rarely open okay my Motilal account in the past 3 months. Okay, I've not had a look at the account at all. That is for my long-term investment. My derivative account is actually an 8-figure account today, and I deploy okay the full strength of that account every day to trade the markets you and I okay trade out of every single day. Now the reason okay I want to show this to you is because most of you okay come from a world okay called TWITTER, Twitter, where there is a lot of nonsense. There is a I don't have any open positions okay to show you. Yesterday's positions have all been taken out. Sometimes okay I have okay some positions okay which are in stocks okay out over there, but there's nothing okay to show you okay out over here today, except okay that I am a trader just like you, trading okay the same markets as you. And what I'm going to be speaking to you about is born okay out of my experience as a trader, where I okay trade these markets okay just like you. Okay, the purpose okay of bringing the screen up to you is because there are people on Twitter who just talk and do nothing okay about it. And then there are okay other kinds of people who show you a lot of money okay they make, but they do nothing to help other people or other traders to make money. Okay, so the purpose over here is to tell you okay that I stand in between today, okay, to tell you that I am another trader who's learned this market by virtue of being in the market, by virtue of knowing okay what the market okay does every single day, and doing the same things okay which you face. I face the same challenges as you. I've done the same thing okay as you do, and a lot of where I have also struggled as a trader. I have also okay been okay that 2-lot trader and that 4-lot trader when I first started off. I have also okay blown accounts, but today okay my standing okay is because I've understood okay how the markets trade. I've understood okay how the market okay works, and I've tried okay to take the information away from the markets and work the markets okay the way it is. Okay, so this message is coming to you from a fellow trader like you. Okay, what I want to speak to you about today is basically okay in market profile is this, that there are actually 9 dimensions to market behavior. How many? 9. Okay, price, volume, time, news flow, sentiment, exogenous events, time in price, volume in price, volume at time. Most people, they operate only on dimension 1, which is price. Agreed or disagreed? Most people, 95% of people operate only on dimension 1, which is price. And there is another statistic which says that 95% of people fail in the business. Okay, I see a correlation between the two. It's only because people are not utilizing the remaining dimensions of the market well. Okay, I'm here to tell you today that we as market profile traders, we work on not just price, we work on volume and time. And I say this all the time, volume precedes price. Okay, now most of you would not be able to comprehend that, but I'll give you a simple exercise to do once the markets are open on Monday. If you don't believe me that volume precedes price, okay, go back, okay, to the markets on Monday and type in a buy order in the Nifty, Bank Nifty, or your favorite stock or whatever it is, okay, that you do trading. The default, okay, would be one lot or whatever, okay, you have set as the default, but change that to 0 and try and tell me back whether that order is accepted in the exchange. Yeah, so this is what you do on Monday when the markets open. Try to send an order with a 0, with showing your volume as 0, and let me know, okay, if the exchange accepts that trade. Okay, and I will tell you based on what I have done, and this is something, okay, I did, okay, about 10 years back, okay, which moved me, okay, to the study of market profile. Your system is going to pop you out a message which says the order cannot go or something, okay, which is there. It won't accept the order. Okay, it won't accept the order. Why? Because, okay, you are inputting your volume as 0, which means whatever price is being traded, your order, okay, will not go through, because, okay, your quantity is 0, which means your volume is 0, which also means that, okay, without you inputting your lot size or your position size or your trade size, your orders are not going to go in the market at all. Yeah, so volume precedes price. Okay, a lot of people, okay, keep saying that, okay, price is everything and bhav bhagwan che. Okay, what was the price, okay, at which Nifty futures closed yesterday? Anyone? What was the price at which Nifty futures closed yesterday? Anyone? 11,949. 3:30 p.m. yesterday. Everyone confirms the price was 11,950. Okay, it's about 11:55 a.m. Saturday morning. What is the price right now? And what will be the price at 9 or 8:55 a.m. on Monday morning? It will be the same, right? Why does the price not move? Because the exchange is closed, right? What really happens, okay, when the exchange is closed? You and I are not trading. When you and I are not trading, there's nobody to input, okay, that F1 and F2, the buy and the sells, which means there's nobody to input volume. Goes to prove that without volume, price can do thenga, nothing. Without volume, price can do nothing. But what has happened is the technical analysis industry, the charting industry, okay, or those people, okay, who sell you charts, okay, they have about 600 indicators out over there, of which about 595 are based on price and derivatives of price. They have never told you this bit of information, that volume is the one which moves price, and without volume, price can do nothing. They've devoted about 595 out of those 600 indicators to price and derivatives of price, and they've just spent, okay, that little bit of time, that 5 out of that 600, okay, for volume, because, and they give you, okay, those fancy terms, okay, that, okay, this is a lead indicator and that is a lagging indicator and this is this and that is that, okay, but nothing, okay, can no indicator of price, guys, okay, with whatever you call it money flow, you call it momentum or anything, okay, which is derived, okay, from an open, high, low, close of a price, will never precede price. All they tell you is false, it's fakery, it's never, okay, gonna go. Anything which is derived of a high, low, close of a price bar cannot be a lead indicator to price. Only volume leads price, and that's a statement, okay, which I make with a lot of affirmation, because, okay, I have worked, okay, all my life, okay, based on this concept, and I know, okay, for a fact, okay, that this is dimension 2 of the market, volume. Okay, and number 3 dimension is time. Okay, time is very, very important. Even if you look at it, okay, in terms of the trading day, if you notice 9:15 to about 9:30, 9:45, there are days of the week where a maximum move is done, and then, okay, there is a period in between by about 11:15, 11:30, 11:45 where the market, okay, is kind of quiet. You should know, okay, where to trade, where not to trade. Time has got its own reason, okay, to work, okay, the markets. News flow is important. I'm not going to spend a lot of time, okay, discussing all these dimensions because we got other material to cover. But sentiment, exogenous event, okay, is our COVID-19. You saw, okay, the way, okay, it impacted. Exogenous event, okay, is an event which is not fully factored by the market. Okay, then time in price, volume in price, volume at time. Okay, volume in the price, okay, means different things. Volume at a particular time, okay, means different things. If you are not successful in the markets today, you've been focusing only on dimension one. You've ignored, okay, the rest of these dimensions which have an influence on price behavior. Yeah, so you got to, okay, get yourself ready, okay, to work on these 9 dimensions. There's a saying, there's a very popular saying that you do not realize, okay, you are asleep till somebody wakes you up, or you wake up, okay, after a long period of time. Would you guys agree to that? You do not realize, okay, that you're sleeping till somebody comes by and wakes you up, right? Now I've given you the information. It's up to you, okay, to how to, okay, wake yourselves up. Okay, in market profile, we focus on the first 3 dimensions, which is price, volume, and time. And market profile is nothing but the study of price, volume, and time. Okay, there's a lot I can speak to you about the subject of market profile. Okay, but I've got only about 60 minutes, okay, with you today, and it's not possible, okay, to discuss, okay, threadbare, okay, the entire thing, okay, about the market profile with you. So I'll ask of you to look up Google, open up Google, look up the Wikipedia, and look for a gentleman by the name of Peter Stedelmeier, who's the individual who gave the market profile to us. Okay, I've learned the market profile from a very close student of Peter Stedelmeier himself. His name was Eric Fernandez. He was my teacher, he was my mentor back in 2007-2009. He taught me the market profile, and Eric has been to workshops organized by Peter Stedelmeier in Chicago. So he's learned it directly, okay, from the great man himself. Yeah, so what I've learned, okay, from Eric, okay, and my interactions both with Peter and Eric, and that's the branch of market profile I believe in, and I practice and I speak about. Now there are a lot of other individuals, okay, who've spoken about the market profile. One of them, okay, is Mr. James Dalton, who's written some very good books on market profile. Okay, I take a lot out of Jim Dalton's book, but I don't subscribe to all of the teachings. My teachings are directly, okay, from Peter Stedelmeier. He's the one, okay, who's taught us what market profile was. I'm just a medium, okay, for him. When I speak to people about market profile, it is Peter's words, okay, my tongue. Okay, I am just his medium. I talk to people about what market profile is based on what I have learned directly, okay, from Peter Stedelmeier through my mentor Eric. Okay, now market profile is a 3-dimensional approach to trading the markets. 3 dimensionals. Okay, you are not gonna succeed in derivative trading only by price. Okay, I think I made that part abundantly clear to you. If you've been struggling in your trading, you've been focusing only on price. If you really, okay, want to have an all-round approach to trading, then you have to, okay, have a 3-dimensional approach to the market profile. For those of you who've never seen a market profile chart before, this is what a market profile chart is. Okay, what sets it apart is the horizontal placement of bars. What sets it apart is the horizontal placement of bars. Okay, let me illustrate that, okay, with a quick example. On the left hand side is your regular 30-minute candlesticks, right? Something, okay, which you and I, okay, trade out of, and which is there, okay, for everyone, right? So this is your normal open, high, low, close candles, okay, which you do that. We do not understand a lot out of it. So what we do is, like, to understand this information better, we add moving averages, we draw trend lines, then we put some indicators at the bottom called RSIs and MACDs, etc., etc., etc. All we want to know is, what is this guy doing? Am I right? What is the purpose of an indicator? You'll call it a money flow, you'll call it a momentum, you'll call it an RSI, you call an a MACD, you'll call it whatever, you'll draw a trend line, you'll plot a moving average. All you want to know is what this gentleman is doing, the price indicator. Am I right in understanding that? What is the purpose of indicators? To tell us what price is doing. I consider it to be a very roundabout approach to understanding price. It's like catching your nose all the way around your head. Okay, why don't we focus directly on the price bar itself? Why don't we focus directly on what the price is communicating to us? And the technical analysis industry, okay, doesn't understand this. Okay, so instead of focusing on what this bar was doing inside this bar, they tried, okay, to look outside, and they tried, okay, to draw inferences from what it was showing underneath and above, and tried to see, okay, what was happening inside that bar. In market profile, what we want to know is we want to go deeper and look at what is happening inside this bar. We want to go inside and find out what is the reason this bar was red and this bar was green. Who made this bar red? Who made this bar green? What really happened inside? And that is the truth of derivative trading. You have to go inside and find out what is happening. You don't have to look at it from the outside. So one of the first things, okay, market profilers did was they said, okay, we're going to organize this information a little bit differently. So if this was a 30-minute candlestick chart and having these bars, okay, like open here and close here and the next bar standing here like this, we said, okay, we're going to stack them right next to each other. We said what? We're going to stack them right next to each other. So, and we decided, okay, to give it names. We decided to give it names. So the first 30-minute candle from 9:15 to about 9:45, instead of just calling it a red bar or a green bar, we decided to call it an A bar. We decided to call it what? A bar. So the period between 9:15 to 9:45, we called it A, and we started plotting it on a chart as A. This is something like, if you used to a PNF chart, this is something like a PNF chart. Everything, okay, which happened between 9:15 to 9:45, instead of putting it like an X or a 0, we said, okay, we will put it as A. Are you guys with me so far? Yes. So we decided to put everything which came between 9:15 to 9:45 as the letter A. For example, okay, this particular thing, A, this happened in the period between 9:15 to 9:45. And we moved on. Okay, the period, okay, between 9:45 to 10:15, we called it the letter B. So everything which price did between 9:45 and 10:15, we represented it by the letter B. So no colors or no nothing. We just said, okay, we will represent it by B. Now there was a way of organizing this B. So if if A was this particular period and A finished somewhere here, the minute it became 9:46, we decided to write B from here, right next to where A was. Okay, and if B, okay, went down like A did, then we decided, okay, to plot B over here. The only difference was this was happening between 9:15 to 9:45, and this was happening between 9:45 to 10:15. 9:45 to 10:15, that was B. Then whatever happened in the period between 10:15 to 10:45, we thought, okay, we'll write it with the letter C. So this C over here is representing, okay, the time, okay, the market moved between 10:15 and 10:45. So on. Okay, we went to D and E and F and G. So the point over here was, okay, instead of, okay, calling it a 30-minute things, we decided, okay, that we are gonna give it names. Now if you can understand this part, you understood about 35 or 40% of market profile. The difference is, okay, we are just giving it, okay, time-based information where we are, okay, denoting everything as a period in time. So everything from A to M, or everything from 9:15 to 3:30 in the afternoon, is represented, okay, by the letters A to M. Okay, this part is clear to everyone, okay, how those A and B's etc. are formed. Okay, so moving on. Okay, if we could, okay, program, okay, everything, okay, between 9:15 to 3:30 p.m. as those alphabets, okay, we got in market profile through a concept called the value area. Now this is the name, but I want you to understand, okay, what this name is. The value area is just the zone where the market traded 68% of the volume the previous day. Which day? The previous day. That is called the value area. Okay, in market profile we relate the market of today to what it did yesterday. Okay, now hear me out clearly again. In market profile we relate the market of today to what it did yesterday. So if today's value or today's price is higher than yesterday's price, we say the buyers are doing a good job. Okay, now hear me out very, very clearly again, guys, because I'm speaking to you, okay, on a very basic and fundamental aspect of market profile. Okay, the value area is where 68% of the market volume was traded the previous day. And if today we are beginning to trade above that 68% zone or 68% of the value area, we are saying that the buyers of today are doing a better job than the sellers of yesterday. In which case, what would be our bias? If the buyers are doing a better job, should you trade with the buyers or should you trade with the sellers? Everyone agrees we trade with the people, okay, who are doing a better job. Yeah, this is a simple and fundamental aspect which is related, okay, by that word called BIAS, bias. And a lot of people, okay, they get stuck in the markets, okay, because they cannot really find out who is doing a better job in the markets, or whom should we trade with. Should we trade with the buyers or should we trade with the sellers? The simple look at the value area will tell you, okay, what decision you need to be taking the next day, just knowing, okay, where the value area is. So the concept of the value area is, it's based on something, okay, which we call the standard deviation, the SD. Have you guys heard this term before, the standard deviation? SD, standard deviation. Okay, roughly means, okay, if today, okay, like in this particular Vtrender room, okay, we got about 1,000 people, okay, listening to this webinar. Okay, and let's say, okay, we measure the heights of everybody. Okay, now, okay, I know for a fact, okay, RM, okay, who's one of the moderators, okay, in our room, he's a very tall person. I am, okay, normal size. Okay, but if we decide to measure the height of everybody, okay, who's listening to this webinar, we're going to be finding, okay, some people, okay, with a height of, let's say, about 5.1, 5.2, and some people, okay, with a height of 6.5, 6.6, 6.7. Maybe, okay, there'll be a gentleman over here whose height, okay, maybe about 7 also. Yeah, you guys agree with me? Okay, there will come a point in time where we will find, okay, that the majority of the room is about 5.5, 5.6. Yeah, and on the left of 5.6, okay, would be those people, okay, with a height of 5.5, 5.4, 5.3, 5.2, which is still normal. And on the right of the 5.6, okay, would be your 5.7, 5.8, 5.9, right up to about 6, which is normal. So what we're trying to say over here is that everybody, okay, who is between 5.2 to about 5.8 is normal. Now that represents, okay, one standard deviation of all the size, okay, we took into account. The minute it starts going under 5 or above 6.5, okay, we're saying, okay, that this person is a little bit hatke, is a little bit different from everybody else. Yeah, so somebody, okay, who is above 6.5, okay, he'll stand out in a crowd of people, right? Would you guys agree with me? Somebody who's about 6.5 will stand out, okay, in a crowd of people. Somebody who's about 7 feet in height will definitely, okay, stand out even more in the group of people. The same goes, okay, for somebody who's about 3.5, who's about 4, or somebody who's 4.5. So what we're trying to do is we're trying to, okay, use this principle to find out what is normal and where are the things, okay, which which are away from normal, not abnormal, but which are a little bit different, okay, from what is normally seen or normally visible to everyone. That is the definition of a value area. And from this definition of value area flows the most important point of a market profile chart, which is called the point of control, which is POC. So in that example of the heights, okay, we took for the entire room, okay, the people with the height of 5.6, okay, represent the POC of the room. Are we communicating? Are you guys okay with me on this? Yeah. The people, okay, with the normal height, which is the most common, which we call it the mode in statistics. In market profile, okay, we call it the POC, the point of control. Yeah. And it represents the zone where the market traded the most that particular day. Or in the terms of understanding market profile or understanding market behavior, it is the zone where most of the buyers and the sellers traded that particular day. Leave your questions, guys, okay, at the very end. I will answer all of them for you. Okay, so a couple of things, okay, I wanted to take away, okay, from what we just spoken. So POC, or the point of control, is acceptance, and the market likes to trade here. This is the words, okay, I want you to take away from this program. POC is equal to acceptance. The market likes to trade here. And the opposite of POC is a word called excess or rejection, or equal to market does not like to trade here. So what we are actually doing is, once, okay, we know, okay, where these zones are, we're trying, okay, to move, okay, from early adopters. Guess who makes money in this business? Guess who makes money in the business? If you are late to the game, if you are late to the move, would you be making money in this business? To make good money in this business, you have to be an early adopter or in an early majority. Okay, so what we do in market profile, we establish ourselves, okay, through something, okay, which is called an auction process. Okay, an auction process simply means, okay, that you understand that there is always two people at work in the market. Now, when you're in market profile and you're trading as a market profile trader would, you strip out everything else, okay, associated with the markets, and you try to see the market as a buyer and a seller. So you don't want to see it as an indicator. You don't want to see it as a RSI of 80. You don't want to see it as a MACD of 80. You want to see only in terms of how good a job the buyer is doing and how good a job a seller is doing. You try to see the market as a buyer and a seller. And you have to understand that there is never one price in the market. There are always two prices in the market. You always have a choice whether to be a buyer or the seller. What are these two prices available to you in the market at all times? The bid and the ask, right? A lot of people, okay, think, okay, that there is only one price, okay, which is the LTP, the last traded price. That's never the case. There are always two prices in the market, and you always have a choice as a buyer or a seller in the marketplace. Okay, so this is an order book which comes in, which comes in, okay, which shows you, okay, where the demand is and where the supply is. Okay, now, okay, there have been some changes made, and you can see up to about 40 of this order book, okay, which is out over there. It only shows you the demand and the supply which is there in the market at all times. The job of demand is to push prices higher, and the job of supply is to push sellers lower. Now, before I go on, the question, okay, which should be uppermost in your mind is, where do we get these market profile charts, right? And for that, you have to go, okay, to the chart section of market profile, log in, okay, to the MP Lite section, and you just do a one-time registration. You would be getting charts over here, right? Just go on to this market profile chart section of www.vtrender.com. You will have all these market profile charts up and running for you. Okay, if you want to understand, okay, how these market profile charts work a little bit more better, go on to YouTube. No, it is completely free. There is no subscription on these. You go on to YouTube. There is a lot of videos over there where you can find out how to work with these market profile chart. Okay, now there's these are all live charts. I'll answer questions about the market profile charts later, but what I wanted to come to you with is basically a strategy to adopt for yourselves the coming week, the rest of this series, and indeed as long as you are trading in your particular accounts. Okay, I call this a trend day strategy, and it is okay, take a picture of the screen if you can, because this is something which will help you over a lifetime if you understand what this is all about. Okay, so definition of a trend day is a market which is opening at one end and closing at the other end. That means the open at 9:15, 9:20, 9:25 is at one end, and the closing at 3:15, 3:30 is on the other end. Now, a lot of people make a lot of money on the trend day, and a lot of people lose a lot of money also on the trend day. Okay, now the reason you lose a lot of money on a trend day is because you are trying to work this thing with your overbought, oversold, RSI, etc., and all these indicators, and you're putting yourself ahead of the market. Okay, now a simple question over here. When a market goes up, does it go up by itself? When a market is going up, does it go up by itself? A simple question over here. When a market is going up, does it go up by itself? So what makes you think a market goes up? People buy, right? There is good demand. Who are these people buying into a market which is going up? Who are these people who are buying into a market which is going? Yeah, they are bulls, they are buyers, but who are these people? People like you and me, right? They could be some institutions also. Okay, there are people with bigger hands, with bigger strength, with a lot bigger size, big money, who are buying into a market which is going up. Like this trend we've had so far in October, it's led by big hands. We've already had 1,000-point run from the lows of last month, and it's driven by big money who've been putting this market up. We call it OTF, other time frame, in market profile, but it simply means that there is a bigger amount of demand than there is available supply. Am I right in saying that? Okay, the demand far outstrips the supply, which is why the market continues to go up. Okay, now the sad truth of trading, especially derivatives, are indeed for that matter the bigger world of trading, is that size is right. Size matters. Okay, might is right. Okay, that's the sad truth of derivative trading. The bigger stick you can carry, the more you can beat up the market. Might is right in this business. That's the sad truth of derivative trading. Okay, but what really happens when a market is trying to go up? Our fellow trader who has just joined the business of trading and is trading derivatives for the very first time, he tends to short into the market which is going up, thinking that is this gonna work out well. You're trading with about 20 lots and you're not gonna get it done, right? So that's what happens with a lot of novice traders. They do not understand that the market is driven by the dynamics of demand and supply, and they cannot really fathom what to do with the market which is going up. They tend to put an order thinking that the market is gonna come down, because they have this weird imagination in their heads that this point is supply, this point is resistance, and the market can go down because of this, right? So you have to understand that the market is driven by the dynamics of demand and supply, and if a market is going up, there is a reason the market is going up, and if a market is going down, there is a reason for which the market is going up. So on a trend day, we strip out everything which the market is, which in the market you know about, and we know and understand one thing about a trend day, that the market is opening at one end and closing at the other end. Okay, now how will you know that? All you have to do is you open up a market profile chart, or you plot 30-minute candles up and down of all the bars of the day. Okay, you plot them as 30-minute candles up and down. Okay, and if you find okay that all your candles are making higher highs all through the days, all through the day, that is a market okay which is in an uptrend, and you have okay what is called a trend day. So I told you earlier that 9:15 to about 9:45 is your A period, 9:45 to about 10:15 is your B period. Okay, if A, B, C, D is progressing higher and higher and higher, you have okay what is called a trend day. In a trend day, you never try to go against the flow of the market. You are all the time okay trying okay to buy dips, and you're waiting okay for a place where you can go back and you can come back into the trend of the day at all times. A lot of people okay think that the market is gone up enough, and then they tend to lose out on the trade and the day, and then they tend to short okay and at an inopportune time, and they end up okay losing okay money in the markets. The way we trade a trend day is that we identify this particular day okay by about 11:15 or about 11:30, and then okay we make it a point okay that we are staying okay with the trend. Now the trend okay can be going up and the trend can be going down also. Whichever way it is, okay, this is the day okay where you can maximize okay the returns okay you can make from the market. Okay, the market does not spend time at any spot. The direction okay is strong. Even okay your indicator like VWAP okay is not valid okay for this particular day because it will never be up, never be visited. The POC, the highest day volume, the what we spoke about, does not move. Why does the POC does not move on a trend day? Anyone? Why does the POC does not move on a trend day? Because the market is not spending time at a particular place. The market is not spending time at a particular place, which is why okay the POC does not move. Okay, but there comes a time in the trend day, there comes a time when in a trend day when there is a slight adjustment happening between the periods of 12:30 to 1:45. There comes a time in a trend day where there is a slight adjustment which happens between 12:30 to 1:45. Okay, and in this particular period, okay, most people who do not understand the trend day okay would tend to give up on their positions in the market. This is the time okay to buy back into the market and stay with the trend of the day, right? So this is the time okay where you have to stay with what is the trend of the day and stay okay with the positions okay which are maintained out over here, right? So make sure that you understand this particular part about the adjustment of inventory, and if you can okay come to okay grips okay with this adjustment of inventory, you will soon find okay that the market is regaining its original trend and going back okay on to higher levels for the rest of the day. It's one of the most profitable strategies to adopt. As you can see over here, this is an example of a trend day. The market is opened up over here and it's closed over here. This asterisk over here is the closing, and this is that afternoon time okay where the market okay hesitated a bit, it pulled back, but eventually okay it regains its composure and it moves up. So you'll always find okay this market okay putting in a wide bar. This is what we called a trend day setup. Now like this there are a lot more setups okay to trade out of, okay, but it's not possible okay to cover all of that, right, in the scope okay of this program. Yeah, so okay, so there are many other strategies. Let's go on, okay, because we have okay some more okay to complete. There are many more strategies, and there are strategies based on the movement of price. There are strategies based on the entry of volume, and there are strategies okay based on a certain period of the day, the impact of time, okay, which is both volume and price. Okay, it is my belief that the market is too big to box it into one or two strategies. A lot of people okay will come to you and you'll hear this okay all the time. Oh, I have this strategy, and this strategy is based on a moving average crossover of some random figures okay they come up with, and then they do a back test, and then they say okay this strategy okay is help me make so and so okay for so and so period of time. Guys, okay, that is all good, but I'll tell you something, okay, in my years of trading the market and learning about the market is too big a creature to be boxed into one strategy. You cannot ever have it done that okay, you will say that this is one strategy and it is going to work in all kinds of markets for me. Like I told you, there are 9 dimensions to the market. Okay, and if you try to say okay that everything can be fit into the only the first dimension, there is something okay seriously wrong. So you have to start okay a study okay in which okay you begin to engage with the market. Okay, and that can happen only okay where you share a relationship with the market. You're going to be understanding the market a lot more better if you can share a relationship with the market. How do you build a relationship with the market? By spending time with the market. Okay, just like our normal human relationships, there are some people okay we get along with very famously, and with some people okay we cannot stand them. But with all those people, okay, your loved ones, okay, your children, your wife, okay, your husband, your friends, okay, the people who you get along with, you have spent time with them. That's why okay you get along with them. Okay, you spend time with the market, guys. Okay, you are gonna engage the market. You're gonna be in a relationship with the market. That's the time okay you will be able to understand the market a lot more better. Build relationships with the market. Okay, you would have a much better word or much better say in understanding the market. I want you okay guys to think in honestly in terms of what you are doing for yourselves as derivatives traders. The markets have changed. Okay, don't live in the past. Okay, all those big companies also okay which stayed in the past, okay, could not okay change, okay, have been no longer there. Like if I have to give you an example of mobile phones, okay, when we started mobile phones first time, when we started using mobile phones for the very first time, Nokia okay was the #1 seller in the markets, right? Today where is Nokia? Okay, they could not adapt okay to the changes brought about by Apple, and today okay they are non-existent. I can say the same thing okay about the world of cameras. Those Fuji films etc are no longer okay in vogue today, right? People change, markets also change, environment changes. Okay, you cannot okay live in the past. You cannot okay work with things okay which worked for you in the past, right? So make sure okay that you are up to date. Okay, you are modern, you are changing with the changing market. You have okay adapted yourselves to the market, because guess what, the market is not gonna adapt to you. So I believe okay in moving from the world of information to the world of knowledge to the world of wisdom. Okay, and if you want to be part of this process, okay, then this is okay simply okay an environment okay for you okay to take care of. I believe okay that we all get influenced okay by an environment. So what I would suggest for you is, wherever you are trading with, okay, be it a Twitter community, be it a WhatsApp group, or you're somewhere okay on that Telegram or wherever, be very careful okay about the community okay you are trading with. Make sure that they have the same mission and the same goals as you. Yes, I call this okay a fishbowl experiment. Have you guys okay seen fish in a fishbowl ever? Okay, the environment okay in which we are in okay influences us. I call it okay a fishbowl experiment. Okay, the fish gets influenced okay by the water around it. If the water around it is muddy, is murky, it's dirty, guess how the fish is gonna feel, right? So the environment okay in which we surround ourselves with influences us, affects us. If you surround yourself okay with the world of winners, you're gonna be in a world of winners, and you're gonna be a winner as well. You're surrounding yourself okay with losing people who can only talk negativity, who can only talk crap, who are only pointing fingers, and you're gonna be affected okay by that environment as well. Surround yourselves with positivity, surround yourselves okay with people okay who strive, who work as hard as you, and you're gonna be a better individual also. And work on your process, work on your method, work on your systems. Okay, you will have everything okay running for you also. Okay, we have a different okay process okay at Vtrender. We are completely focused on market profile and order flow. Okay, if you want to work with us, this is okay where we are. But what I wanted to bring to your attention is those resources okay which we have as traders. I've struggled myself okay as a beginner trader. I understand okay the difficulties a trader has. Okay, so we've basically made it easy for traders to get started in the business of market profile. And this is from us to you with no strings attached. Okay, we do daily posts, we have free market profile charts, we have sections on market profile for you to read out of. It's up to you to take advantage of that and go. Charts are all live. Okay, so that's about me. From me, we are about 1 hour 20 minutes into this program. I wanted to bring to your attention about the possibilities which are there in the market profile for you, but I won't be able to do justice to such a big study in about an hour. I just wanted to open the floor to you for what the world of market profile was all about. My apologies to people who thought this was a little bit too basic. It was never intended to be a higher level market profile training program. Okay, it was meant to talk about the basics. So if you feel you came here and it didn't make a lot of sense, my apologies to you, but I did mention to you that I would be talking about the basics of market profile only today. Okay, this was an outreach program for people to understand the world of market profile, and it represents at best a start for you to take this thing forward. Sound check. Yeah, it's a 5-minute chart. What you see over here is the candle. Okay, and what I've done is basically we've gone in the inner workings of this candle. So on this left hand side, all this section is the sellers of that candle, and on the right hand side are the buyers in that candle. And as you can see, when price moved up, it met sellers over here. All this pink is sellers coming into the higher prices. So what we do in order flow is we take the guesswork out. We don't make an assumption that there is demand here or there is supply here. All we are doing in order flow is we are just taking all the guesswork out, and we're letting this information come to us whether there is actual buyers or sellers. So as the market moved, there was this movement higher which was led by all these buyers, but as it moved there was a profit booking right at this bar. When this profit booking happened, the market stalled. So whenever we see this profit booking, we never go buy, never go into buy mode. We are thinking about taking profits over here. The market drop back over here. So the only inference which an order flow chart gives us, it strips out all the guesswork and it shows us the market for what it is, the role played by buyers and the role played by sellers, and it tells us not to make assumptions and to work on the correct information which the charts are giving us. Remember that painting I showed you at the top of the slide from SRF? Okay, that painting does not make sense if you do not add information to it. And in an order flow chart, we add information which is the buyers and the sellers of the marketplace. There are no books on order flow because it is one of the most revolutionary concepts of the technical analysis industry. And at Vtrender, we are the pioneers in order flow. We've been trading with the order flow for the past number of years. The rest of the market or the trading world do not even know of this term, but that's to them. We don't have anything to prove to anybody. As long as our trading accounts are profitable, we are fine with that. That's about it from me. I wish you the best and continue in your pursuit. Continue with what you are doing in market profile. I'd love to have all of your questions. If you have anything to ask me, you are free to talk to me on Twitter. I try to do my bit to help other traders get better at the business of trading. But beyond that, I have no need of showing anything else to anybody else. Very happy with the way I trade my account, surrounded by a group of traders who trade alongside with me, and there's nothing to prove to anybody, right? So you won't find me putting screenshots and putting all these things to other people out over there, because at the end of it guys, there's nothing to be proved to anybody, right? But I am here to help fellow traders out, to talk to other market profile traders, to talk to you about how it has helped my journey, and if you can benefit from it, I'll be all the more happier. Okay, so with that said, all the best to you for the coming trading week, and I wish you well, and keep learning, keep earning, and all the best to you.